what do you make of just the point that the consensus right now that no one really believes we hit a bottom? I can't believe it either, that it'd be that simple. How about you?
Well, that's all very logical, right? And I'm sympathetic to some of the comments that Jim Cramer made last night, for example, about the 10% moves, although what I'm specifically looking at with respect to the fixed income market, and we talked about it last time I was on last week, was the mortgage market needed to clear, right? And so as the Fed stepped up, and we've seen all this evidence of mortgage REITs being liquidated, but the mortgage market looks like it's clearing. You had just a ferocious rally. You've taken that current coupon Fannie Mae mortgage rate down to a new all-time low. So I think the Fed's gaining traction. On Monday, after they announced all the programs, everything rallied except the stuff they weren't buying, high yield, for example. But yesterday, that participated as well, undoubtedly, because the equity market had firmed in anticipation of the fiscal stimulus package. But the fixed income market looks like it's starting to behave more normally. Inflation break-evens are implied. Inflation is going up. That's a plus. So I feel better about that. I also think we are in the vicinity of where we should make a low. Based on all the business cycle analysis I've done every recession since World War II, we shouldn't go much farther than 2150 or so on the S&P, unless this is going to be a OPEC embargo 1973 to 75 type event that hangs around with us for the better part of a decade. Otherwise, we've done the amount of damage that we should do given a impending recession that should be fairly quick.
Stephanie, I was thinking about what you normally bring us when you're on. I was thinking, I can go to Stephanie and we don't even need to talk about the overall market. I'll bet you've got some. We can find individual issues that might have a compelling reason to start acquiring them right now, whether it's the ultimate lows or not.
Yeah, I mean, I would just, first, before we talk stocks, I would echo what Barry is saying in terms of how underappreciated and how tight the bond market got over the last couple of weeks. So unlimited QE gives the Fed the flexibility in terms of what they're buying, when they're buying, how much they're buying, that kind of thing. And so that is very important. That is going to lead to confidence. And then the fiscal package, the $2 trillion versus the $1 trillion, also should lead to better confidence in small businesses and corporations. And that's what we really need. We really do need confidence. So what do you do in this environment? Sure, you can. I mean, I've been picking for the last couple of weeks in terms of names. What I want to do, though, is do a barbell. I want to do some defensive, but I also want to have some of the recovery names, if you will, because those recovery names are the ones that got hit so hard. So a couple of weeks ago, you and I were talking on the show about Coke. It was at $60 at the time. The stock is now down under $40 in the 3.5 weeks time, and the stock is yielding a very attractive over 3%. And so I think as China recovers and maybe as the U.S. stabilizes, that is a kind of a name that I want to own. Microsoft, I want to own in Microsoft. By the way, they own Skype, which we're all using at this point, right? Free cash flow generation is enormous. That's the kind of name I want to own. The only problem is it's only down about 12% in the past month. So I actually almost am rooting for it to go down a little bit more. Bristol Myers and the Celgene deal. So there's lots of names on the defensive side. On the more recovery, cyclical names, Wells Fargo is now yielding 7%. The CEO and the ex-CEO are both buying stock. It's down 37% in a month, and their efficiency ratio is in the 70s. So there's a lot they can do there. I liked the news yesterday on Chevron in terms of them cutting CapEx. That's what we wanted them to do so they can shore up their balance sheet. They stopped the buyback. The dividend is 8%, very attractive. And then lastly, Union Pacific. The stock is trading at 15 times. They've got a new COO in the helm and at the company, which I think ultimately he'll be the CEO. And there's a lot they can do in terms of cost efficiencies, and you get a 3% yield. So I want to barbell it, a little bit of defensive and a little bit of cyclical.